So get ready for new highs, but listen up. Now, this past week has been very interesting. On the one hand, we saw a lot of concern, a lot of extreme fear, a lot of anxiousness going into Jackson Hole for no absolute reason, because I've been telling you for the past few weeks, it's a given, this man is going to announce a rate cut. And lo and behold, this man announces a rate cut. Every other media outlet out there running around basically acting surprised, while everybody in my community knew this is exactly what's going to happen. So Jerome Powell, the Fed chair, comes out dovish. And I think that is the right thing, the right component to combust the markets, to ignite the next bull run. So with inflation dying, with the labor market basically being very, very shaky, this is a good setup for the Fed to be very aggressive with the rate cuts. If the Fed has essentially two mandates, one is the labor market, the other one is inflation. So if inflation is getting better and better and better, we dropped all the way from 9% at the peak to 2.9% right now. We're really close to that 2% target. While the job market, the unemployment numbers keep rising and rising, quite concerning. Now, with unemployment, the one thing you need to understand that it doesn't just always continuously rise in a linear fashion. Unemployment numbers can really spike up quickly on you, like a train leaving the station, right? In the beginning, it's slow, but then it gets fast and fast, and all of a sudden, before you can even notice, you can't even catch that train. So the Fed is now more concerned about the labor market, the unemployment numbers, and that means we're going to have big cuts coming up.
Inflation is now much closer to our objective. The labor market has cooled considerably from its formerly overheated state. The unemployment rate began to rise over a year ago and is now at 4.3%. The cooling in labor market conditions is unmistakable. We do not seek or welcome further cooling in labor market conditions. The upside risks to inflation have diminished, and the downside risks to employment have increased. The time has come for policy to adjust.
And this is a great setup because it means that unless one of these events happens, we are on a trajectory to go higher and higher this year. But it's not going to be straightforward and it will have its bumps. Let me explain. Unless in the next few weeks, we're going to have some bad economic data that shows us the economy is worse than everybody thinks, or on the other hand, if we have some big boo-boo in the big tech world, for example, Nvidia missing earnings this Wednesday, so unless big tech sells off, or unless the economy breaks, after the very dovish Jackson Hole speech from Jerome Powell, we are heading up, not down. But hey, this is important because I still think we will get a strong correction this year before we get the final run up. So there is still a big correction headed our way. And a lot of investors that don't see this coming will be surprised, and it's going to cause them to sell off. Not this community. So before the November-December estimated bull run, we will see one more big drop, probably in September, but I don't know for sure. Now, you know exactly what to do. I'm not going to repeat myself. If you see this coming like me, what you do is you understand, hey, this is a temporary drop before we hit the big bull run. So what we're going to do, we're going to use this opportunity to actually increase our positions, to decrease our cost basis by buying up the same stocks we like cheaper. We understand that this is an opportunity. So don't get spooked and have a plan. If this happens, you know exactly what to do. I don't need to repeat myself every single video. Now, there's a few reasons why I'm very bullish about the market going into the later parts of 2024 and in the next few years. Now, as far as this year goes, what I'm seeing is that we have a record number right now in money market accounts. $6.24 trillion. That is the highest we have ever been. We have never seen this much money parked on the sidelines. Now, granted, not every single dollar is going to go back into the stock market, but about $1.5 trillion is money that went in there that was parked right before the bull run started from people who thought that 2023 is going to be a bad year. Now, this money will flow back into the stock market. Have no mistake about it. Whether it happens today, over the course of the next 6 months, it will happen because the length of time these professional money managers can afford to sit out and cost their clients money is running out. They are on borrowed time. And as we near the end of the year, their time is running out because at the end of the year, they're going to have a lot of explaining to do. Now, obviously, what they're waiting for right now, because they are on the sidelines still, despite the massive bull run we had in this year as well, but they are on the sideline because they're seeing the same thing I'm seeing. There is one more dip ahead, one big, massive correction that's going to scare people off, it's going to shake off the weak hands, and they're waiting for it to get in before the big bull run. They're waiting for the same thing I'm waiting. And you can be in the same situation, understanding, hey, the big dip is going to scare a lot of investors. It's just a head fake for these guys as well. So you have to understand, once this dip happens, what happens September, early October, I don't know, maybe mid-October, but it's going to shake off people, and then all of this money is going to flow back into the market, basically spiking it back up. And then, at this point, you will be ready because I thought you will. You understand that the dip is your best friend, and this is the time to load up and build up your cost basis before the spike. Now look, it's not just about the sideline money. The entire setup is exciting. Look, we have right now easy money starting up again. The Fed is pivoting. That's obviously a certainty right now after Jackson Hole. We have 8 consecutive quarters of great GDP numbers running at 2.8%. We have inflation dropping from 9% to 2.9% and heading downstairs towards the 2% really quick. And on top of it, what we have right now is a massive catalyst, financial, economic, and mainly technological, the same way we had with the invention of the internet. The AI boom has just started out. It's not even close to being in the peak. And to say that this market is going to crash before we even seen the AI boom actually get materialized is absolute nonsense. Nvidia has 20x'd its revenue from data center in the past 4 years. It has gone from being 25% dependent on data centers to about 90% of its revenue coming from data centers. Nvidia's entire existence, DNA, has changed because of this revolution. And you have to understand that this is just the start. You don't have to listen to me. Listen to Eric Schmidt, the former CEO of Google, who just gave a talk saying, hey, every single hyperscaler is going to spend about $300 billion on Nvidia products for the next few years.
Sam Altman is a close friend. He believes that it's going to take about 300 billion, maybe more. I pointed out to him that I'd done the calculation on the amount of energy required. And I then, in the spirit of full disclosure, went to the White House on Friday and told them that we need to become best friends with Canada because Canada has really nice people, helped invent AI, and lots of hydropower, whereas Canada and the U.S. are part of a triumvirate where we all agree on.
So these $100 billion, $300 billion data centers, electricity starts becoming the scarce resource.
And by the way, if you follow this line of reasoning, why did I discuss CUDA and NVIDIA? If $300 billion is all going to go to NVIDIA, you know what to do in the stock market. Okay.
And if you take these numbers and you translate them into simple multiples, what you find is if NVIDIA makes $250 billion a year for the next few years, at 20 price to sales, we're talking about a $5 trillion company versus a current valuation of $3 trillion. So if you think NVIDIA is not going to double itself over the next few years, you're absolutely delusional.
This is accelerating. And I think the street, like you said, every quarter, prove it. This revolution is just starting, but it all starts with NVIDIA. In my opinion, it is the most important earnings, not just of the year, potentially in many years, because of what this represents in terms of tech. If you look what NVIDIA is doing, especially from chips coming forward, this enterprise demand is just starting. And in my opinion, of course, Powell, Jackson Hole is so important.
Huge, obviously.
But the market, what it's going to do for the rest of the year, and I could argue even in 2025, it starts with this NVIDIA earnings. And I expect, get the popcorn ready. It's going to be a
You say this every quarter, Dan.
No, but this is going to be a showstopper showing where the revolution's going. Okay. And I think the skeptics continue to get proven wrong.
But NVIDIA is just one link on this massive chain. Think about all this money that's going into the generative AI business. Hundreds of billions of dollars. Think about companies like Palantir who build the operating systems. Hundreds of billions of dollars. Think about the infrastructure, the electric infrastructure. This is a massive shift to the way we do business. This is pretty much the invention of roads and cars, electricity, internet. This is massive. To say that the world is not going to be ready for this because we don't have enough lines on some sort of charts and we're going to collapse because come on, it's short-sighted. Maybe we have a crash, maybe we have a dip, whatever. The thing is, this is 1995 playing all over again. But before you all get excited and mortgage your house to buy NVIDIA stock, hold on a second. Wait, let me explain. This is just the beginning, which means it's going to be volatile, it's going to be rough, it's going to be bumpy. Now, Wednesday, the Nvidia earnings is going to be kind of the guide to where we're going short term. How far away is this dip? The next correction is going to happen, because it is going to happen. And it's quite simple. If Nvidia by any chance lays an egg, well, we bring that correction closer. The time frame from now until that big dip gets shorter because Nvidia basically drags the entire market with it. But if Nvidia has great earnings, then we push it forward into the future, because it's going to take time for the market to relax from the euphoria of great Nvidia earnings. Nvidia is currently the most important company in the stock market, and whatever it does in the Wednesday earnings is going to determine how long we have before that correction. My strategy is very simple. I'm waiting for that correction. I know it's going to come. I know it's going to be available for me. And I know a lot of the stocks I like will be at a discount. I'm not going to be FOMOing into the stock market saying, oh my God, this thing is never going to correct again. We're going straight to $5 trillion Nvidia. The market is going to double itself. Yeah. But even in 1995, if you look from 1995 to 1999, the markets don't go up in a straight line, especially now, when all of these people in mainstream media, in professional money managers, all these guys who love to collude against retail investors, they're going to shake that tree one more time. A lot of them got locked out and they want your positions. So they're going to use the next step to get you to sell. They're going to use media to stoke fear. Maybe it's going to feel like the total collapse of the world. Maybe it's going to try to market it like 1999. I don't know what's going to happen, but it's going to be very volatile and very painful. And only the ones who understand fundamentally what's going on in the market are going to last and going to use this correctly. Because when there's blood on the streets, you buy, especially if that blood is yours. Don't forget that. I'll see you in the next one.